It just makes life a little easier, so you don't have to do a whole bunch of back and forth. But I'm just going to drag this over back and forth so I don't have to keep doing it within Zoom. So we'll kind of look at this NZD JPY. So this is showing up on a 1 hour time frame, and it's showing as a shark pattern. So if we were to just take this trade based off the alert, we could do that, right? Because we have, it identifies our entry, 77.52 or 77.56 and 77.10. So if I kind of bring up a calculator, we kind of do a quick pip calculation, right? So 77.56 minus 77.10, which is that first entry to that second entry. So basically that zone that it tells us to kind of enter in is a 46 pip zone. So anywhere in that range is where we can kind of get into this on the buy side. And then if we kind of look down here a little bit lower, where's our stop loss? 76.78. So let's say we decided that we want to actually get into this trade based strictly off the harmonic scanner at the current price. We have the current price right now is 77.45. And then the stop loss, where it says put the stop loss, is 76.78. So we have a 67 pip range. So we know exactly going into this trade that we're going to risk at least 67 pips to take this trade. So that's a benefit of using the scanner, because you already know your entry zone, or if it's just one entry number, you know that entry level, and then you also have that stop loss, 67 pips. So kind of keep that in the back of your head, what position size you want to take based off what's showing. But if you don't have the scanner, or you want to confirm your analysis and kind of get, you know, better entry levels and some basic technical analysis, if this is not working, most of you guys, I'm sure by now, have looked at the support resistance videos. So this is the NZD. Let me clean this up so we have a nice fresh chart here. So this is the same exact thing we're looking at on MetaTrader 4. We're just looking at it on a clean chart. NZD JPY on the 1 hour. Okay. So the scanner tells us we can get in now, but we can do some more analysis. One thing I like to do is kind of look at the higher time frames first, and then kind of go to the smaller time frames. So most of you all are going to be trading that type of way anyway, more of the swing trades. And so this trade is on a 1 hour time frame, but I like to back up at least to the next level up to see what the market is doing, so I can kind of just get a better analysis of it. So I'm going to come up to the 4 hour chart here, and now I'm going to zoom back in for you guys here. Now, if I look at the current prices right now, I can see that it got real close to prices previously back here in October. So every time I get started, he wants to come to the door. So if I look at the prices previously here, I like to mark that using the horizontal line tool. So the actual open and the actual close of the price is something I pay a lot of attention to when I make my analysis. So we see that we had the market come down significantly, then it had this nice significant turnaround. So I'm going to kind of zoom in on this area in particular so I can really show you guys how I draw these support resistance levels. Make sure this is the right one. All right, so I like to create a zone. So very similar to how the harmonic patterns operate, I like to create zones as well. And the first line tool I'm going to do is using the open or the close of the lowest candlestick. So wherever the lowest open price is or the lowest close price is, that's where I usually draw my first horizontal line tool. So we can see here this red candle had came down, and then we had this green candle. So this is the lowest open close price. And so that price is roughly 77.45. And then I also draw another horizontal line at the lowest wick. So how far was the lowest low price in the entire move that actually came down. So the lowest low is this actual next candle here with the small body and the large wick. So I sent that one video out last week. When I put it in the chat, it was actually the wrong video. That was a good video as well, but I emailed out the actual candlestick video. So hopefully you guys, if you guys had a chance to watch that, it talked about the open price, the close price, the candlesticks and stuff like that. That's easy stuff you guys will pick up real quick if you haven't had a chance to look at it. But so if that didn't make sense right now, what I just said about the open and the close price, let me know and I can kind of go through it real quick. But I like to have wherever the market had a significant turn, then I put my first level at the lowest open or lowest close, whichever one. In this case, it just happens to be at the same point. And then also at the lowest low price, which is that next third candle over. So now I've created this zone that I'm going to look for as future support, because I know this is a major level in the market. And again, this is on a 4-hour time frame, and the trade is on a 1 hour. Now, the higher the time frames, the more strong that these certain patterns are, the more reliable these patterns are on these higher time frames. So if you see the same pattern maybe on a 5-minute chart, it might not be as reliable. But if you see it on a 4-hour chart or a daily chart or a weekly chart, these patterns tend to be really, really reliable. Same thing with an hour chart. That's why I kind of like using those for swing trades. So we've identified this zone in the market, and then I'm going to zoom back in a little bit here. And then as we kind of scroll over to where prices currently are, we see that we're really playing inside of this zone that we previously identified. So as prices were starting to get down and get down and get down to this area, we knew that back here on October 30th, this was a major turnaround in the market. So I'm just going to kind of highlight this so easy to see, right? So if I'm going to take a trade, now I've done my own analysis as a major support and major resistance level, and I've looked at this actual zone. And the zone that I've personally created is between 77.45 and 77.32, based on my previous numbers back here on the left, right? So the zone I created is a 13 pip zone, which is a lot closer than the 46 pip zone that we actually had from the scanner. So I'm always looking for a way that I can decrease risk. So if I have tighter entries, I don't have to risk as many pips on a trade. If I lose that particular trade, then I can look for that next entry based on another set of analysis. As you know, we kind of learn this stuff as you guys go through the courses and stuff. There's so many different ways you can analyze the markets. Support and resistance is one of those ones that you just have to master, because it really does help you with your entries and exits. So now I've created this nice tight window that's tighter than the actual scanner, but I also have two reasons to get into this trade now. I have the scanner telling me based on a pattern, which saves us a lot of time so we don't have to draw and mark up everything, but also using support and resistance, it's also telling me that I can get into the market based on previous level of turnaround in the market. So now I'm gonna go back down to my 1 hour time frame, because I did all this on the floor. So we'll drop back down to our 1 hour, because that's what the scanner told us, and scroll all the way to the right. And we see that like looks really, really, really good, because we see that the price is really playing inside of our zone, and this zone is really holding. So if we want to get into this trade, we can get into this trade now, and our stop loss can actually be just below our zone around the 77.20 area, because that's the lowest the prices have actually fallen here. But if you wanted to use a scanner and actually do, what's it, 76, 78, which is like another 50 pips of risk, you can do that. Especially being newer traders, I definitely would recommend using what the scanner tells you right now. But as you become more proficient, you can use your own analysis to really make your stop losses tighter, when you get into the markets, and you don't have to put as much risk on the table when you start to look to get into these trades. So I have 2 reasons I can get into this trade. So it's definitely one of the ones I would say kind of take this trade on your demo accounts and see how it plays out. And you can put in take profit 1, take profit 2, or take profit 3. Or you can just let it ride out. But definitely at least put in take profit 1 so you can kind of get a feel of, the market going there. If it gets up there, that sense of accomplishment, and really start to see how reliable the patterns are. Anybody have any questions on that particular setup? So that's basically just using support and resistance. Indicator questions we'll definitely talk about as we keep on going, like next week, because I'll jump into indicators and stuff like that. Another thing I like to do too on the scanner as well is if you see it on multiple time frames, the same alert on multiple time frames, that's also a good indication. So kind of quickly scrolling through here, if I see another NZD JPY, NZD JPY on a 4-hour is an old trade, so it's actually showing an old trade and nothing else. So we do have the one on the 1-hour time frame, then we have our own analysis on it. We have clearly defined our risk, and we've clearly defined reasons to get into this trade. Right. Let's take a look at another one. Euro AUD just kind of popped up here, and I don't like this trade. We will look at this Euro NZD though. All right, Euro NZD on a 1-hour time frame. Let's do daily. I want to do something else daily so you guys can kind of see a swing. Everything's 4 hours. All right. There's a concept I want to talk about tonight. All right, so we're going to look at the USD Swiss franc, USD United States dollar versus the Switzerland franc. All right, and this is based off a daily chart. So this one happened about 15 days ago in a nice pattern. And same concept here. We had 2 entry prices here, 131 and then 101.94. And then I have a stop loss of 103.117. So that's a nice pip difference there between this first entry and this stop loss. But we're going to take a look at it on our own as well. So we identify it, come up on a scanner, but we want to do a little bit of our own analysis. So USD Swiss franc, where is it? Right there. Just click it and grab it. And so let me go out here to a daily chart. All right. First thing I'm going to do is kind of look for some major areas of support and resistance again. So where did the market have some nice turnarounds? And so back here we had a nice entry, a nice support level, resistance level, had a nice wick right here. All right. And this is kind of exactly where the first entry is showing us on the actual scanner itself. So if the scanner is showing me 2 entries, I like to see if there's an actual legitimate support or resistance on that, near that area as well, when I'm kind of marking up the charts. But we really only have this one back here. The rest of this, the market kind of breaks this level multiple times and it doesn't really hold it any significant time. So if I was trading this blindly without the scanner, I wouldn't put too much stock in this lower yellow line that I just drew. But there is something very, very significant about this particular yellow line, and it's the number 1. Whenever you get to these nice round numbers, especially when these pairs are reaching, what's the word I'm trying to, it's called, what is the word? 1-to-1 ratio. I can't think of the word off the top of my head that I want to use for it. But basically what this chart is showing us is that 1 US dollar is equivalent to 1 US franc or 1 Swiss franc. And so when you have a 1-to-1 ratio, that's the word I was looking for. When you have a 1-to-1 ratio, that's a real nice trade setup, because that's a nice round number that these big banks and hedge funds are looking at when they're trading as well. So as this thing started just creeping up without even using any type of analysis at all, just based on knowing how powerful round numbers are in the market, especially in the foreign exchange market, this was an easy setup to take this trade. And it was really just selling at the number one, and kind of using stop losses as the next level up as support or resistance level. So the first yellow line would be that line to get in at based off the number one. And then we also have the second yellow line up here as another resistance level. So in case this first one doesn't hold, we were going to definitely start to pay attention to 101 levels as well. Now, anybody that did get a chance to go through the candlestick video, let me see if I can mark this up real quick. This big red candle right here that I'm going to try to draw this arrow to. This chart doesn't keep moving on me. That's a nice inverted hammer. So that big red candlestick is a sell signal. It's not necessarily sell right now, but it's a sell signal. And it's showing us that a lot of people were selling this market between the open price, where it opened, where the body is, all the way up here to this very top. So there was a lot of people selling in this area as soon as we got up to this nice round number of 1. So you start to look for potential entries to get in on this market. And again, if you didn't know even support and resistance, and we were just kind of looking at the scanner by itself, we did have a nice level to get in at right there at 131. And then we let the market go. So again, I wouldn't use this entire zone as risk. You definitely want to find ways to cut down the risk, especially when you're talking about a 300 pip range. If you're risking 300 pips on a trade, chances are you're going to take a very, very small position size because 300 pip range is a lot. So if you're looking at, I forgot who I was talking to about these entries like this. If you're looking at these entries, if you're going to take the first entry, chances are you want to kind of use that second entry as your stop loss. Now, if that first entry fails, so if this trade had continued to go up, you might want to look to get in at the second entry and then use the stop loss as your next stop loss. Don't try to use this first entry, sell it, and put your stop loss like way up here. It's just too much risk on the table. You're actually better off, and you would lose less money if you actually got in on the first entry and had your stop loss at the second. And if you got in on the second and it went against you again and then lost up here, you're better off doing that than risking this entire distance by itself. So definitely want to cut down those risks as much as you can. But as you're starting out on your demo accounts, definitely just getting a habit of putting in that stop loss, understanding why the stop loss is there. But if you can find reasons to kind of get that stop loss closer down so you're not risking as much per trade, that's really what you want to do. And you can use simple support and resistance to kind of do that. All right. Makes sense? Just give me some yeses in the chat if it makes sense. All right, let me go over here and check these. Sorry, I didn't have the chat up. Chat. All right. Can we stay in a trade longer if it goes above support and resistance? You can stay in a trade as long as you want. Let me go back to, will do. Ask your question another way, LaShonda, or open up your mic. I want to make sure I'm answering your question right. Because if it bounces off of resistance like this USD Swiss franc, if it's bouncing off of this top level resistance, you can stay in this as long as you want to. You can move your stop losses in case the trade decides to go back against you. There's kind of some strategies there. So let me know exactly what you mean by that one. Um, and Stacy says, do you mark your charts on both daily and for? Yeah, so I'm a chart marker upper. So I like to mark it up on the daily, the 4 hour and the hourlies, depending on what time frame I'm trading. So if I'm looking at a trade on the daily, occasionally I'll jump out to the weekly and mark my charts up there too. So let me kind of pop all the way out here. So on a weekly chart of this USD Swiss franc, we did have a nice level of resistance right here where this green big wick is. So I would kind of mark up this on a weekly chart too, kind of depending on the charts, but the weeklies take so long to develop in the patterns. And then I would kind of come down to the daily chart, and I see that that 179 that I marked up on the weekly actually gives me a better entry than I would have if I just marked it up on the daily. So I do mark up my charts quite a bit. It's really just to try to get the best entries I can. And I answered your question, LaShonda. Awesome. Cool. All right. Any other questions? And we can kind of check out one more. All right. Let's see. Same thing looks good here. It's ugly. I don't like USD CAD. Me and that pair do not get along. We'll kind of look at this Euro NZD because this one's been kind of interesting. All right, so this Euro NZD is a sell based off the 1 hour time frame here, and I can't remember if I saw this thing twice on here. Euro NZD on a daily is also setting up as a sell. So 1 hour Euro NZD is a sell. Daily Euro NZD is a sell. Slang there. All right, so we'll kind of look at that. So it's on the daily is the actual chart that I would prefer to sell it off of, because again, the higher the time frames, the more solid the patterns are. And we see that it's at the very top of this zone here. So if we do some quick math, we see that the stop loss here is at 175.10, and this entry price, kind of where we are right now, is at 171.77. So again, you don't need to be good at math to do this pip stuff, but we're looking at, I did something wrong there. What did I do wrong? 175.10 minus 171.77. So we're looking at 333 pips of risk. I don't want to risk 333 pips. It's just way too much. So what I would either be doing is taking a smaller position size. So if we do lose, you just take a small position size, because your reward is going to be pretty good. You're going to have a real nice risk to reward ratio if this thing goes in your favor. So if we got in here at this first entry and then it hit our first take profit level 1 at 161, around up to 162, you're looking at like a 900 pip gain, which is a nice 3-to-1 risk to reward ratio. So this would be a trade that you're definitely look to hold for a while. It's not going to happen like in the next week. It's probably going to take a couple weeks to even get down here. But we'll kind of mark it up here because it's telling us to sell on the daily, and again on the 1 hour. Let's get out of that. Ooh, too small. If your charts get crazy, you can adjust it on the left-hand side. Just click and drag, and it'll adjust for you. So we'll kind of look at this one and mark it up. So Euro NZD, look for it on my market watch. Just click and drag it over, and then I can right-click and go to templates and change whatever template if it's not loading for you. And we're looking at the daily chart. Again, I'm looking for the last major swing, the last major turnaround in the market, and it's kind of right here. Again, this is another pattern. I'm not sure if it's in that video or not, but this is called a tweezer top pattern. If you ever see the wicks of the candles almost identical next to each other, it's called a tweezer top pattern. So basically, this is our reversal sell pattern. And again, this is a daily chart. So if you had sold it after you saw this pattern, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost two 2 full trading weeks, this market went down south, and you can cut a trade just off that pattern alone. But now we're coming back up here and retesting a major area again. So the same way I drew that support and resistance at the bottom, I do the same thing at the top. I create my own little zone. So I'd use the highest open or the highest close, and they just happen to be at the same point here. And then I also look for the highest wicks available, so I create my own zone. And right now we're at the very, very top of our zone right now. So this is the zone I'm looking to trade, okay? So I'm not going to risk 333 pips. I'm going to risk a lot less than that. So in order to kind of figure out where to put my stop loss, I've kind of got to zoom out. I mean, get rid of that one. I kind of got to zoom out and look for the next level of resistance at the top. In this case, I really don't recall there being one. Yeah, okay, so there's one like way back here. So we're gonna kind of zoom in. I'm gonna grab the little vertical line tool so you guys can kind of follow. But I'm gonna put it close enough, but I don't want to put it on it so we don't see it. But just to the right of where I put that vertical line, there's a little candlestick wick that pops up, and it's the highest before you get like way up here to that far left. So what I'm going to do is put another resistance level right there. That's going to be my stop loss. So if it gets past that, I know that there's nothing else to stop prices to get to turn around. The next level up is going to come way up here. So I don't want to risk all of that. So I'm going to come back and zoom back in on my chart over here and squeeze that down a little bit. All right, so I'm gonna change this color so we can see it a little bit better. All right, so that red line is going to be my stop loss. All right, so 172.75 is going to be my stop loss, you know, just above it, because there's actually, you know, price had got right there to it previously. So just above it, like 20 pips maybe above that line, that's where my stop loss is going to be on this trade, trading based off support and resistance. So we saw the trade show up on the scanner, multiple time frames, trying to figure out where we can get into this trade. Again, the daily is the strongest trade. So that 1 hour is nice that it's saying a sell, but the daily is that nice stronger pattern that we're actually looking to sell it off of. But that risk of 333 pips is just way too much. So now if we were to get into the market, now we have 172.75 minus 171.78 is where we're at right now. I've cut that risk down by 2/3. So now I have a 97 pip risk versus a 333 pip risk. So if I lose the trade, I'd much rather lose 97 pips than 333 pips. So there's a lot of different ways that you can definitely use a scanner, but also knowing your own technical analysis, you can cut down a lot of the risk as well, to get just better risk to reward ratios and not have to risk as much. But again, you know, as you're starting out, do what the scanner tells you to do, unless, you know, what I'm kind of teaching and kind of saying to you guys and what you're watching that video is making sense, because you don't want to risk 333 pips. Any questions? Any questions? Any questions? Any questions? Any questions? If anybody wants to try to install their scanner again, definitely can do that while we got a few extra minutes here. Any questions? Any questions? Any questions? You guys learning a lot of stuff. Some powerhouse traders. It's crazy that I have all women on here too. They say women are better traders than men because they don't risk. They're not as risky in general. So I definitely like to hear you guys' stories in the next few months to see how you guys are doing. Cool. Angelica says a lot. Awesome, awesome, awesome. It's definitely a skill that you learn, and once you get good at it, That's nice. Ooh, no problem, Stacy. Any questions you guys have? Any questions you guys have? Trying to think of my schedule going into this weekend. This weekend I'm going to be super busy. So if you guys send me a message, I will try to get back to you as soon as possible. I have 2 church services that I have to do because I do tech stuff there too. So I do soundboard and all that kind of stuff. So I have 2 services on Sunday. So Sunday's going to be super busy. And then Saturday after about noon, I'll be busy. So if you guys get a chance to work on the scanner stuff tomorrow, I'll be around pretty much all day tomorrow. If you guys have any questions, if we need to jump on Zoom and do a screen share thing, just let me know. I am pretty free tomorrow to kind of help you guys make sure you got that installed. And if you haven't already, install MetaTrader 4 on your smartphone and log into your demo account on there as well. Just one of the things you want to have as a backup when you actually start to take some of those demo trades, and you can kind of watch it when you're away from your laptops and tablets. You always have the trade kind of on you on the smartphone. I think that's all I got. We'll kind of talk about some indicators next week. My favorite is RSI, so we'll kind of look at RSI, MACD, and moving averages, some extra stuff that you can put on top of support resistance to make your analysis. So I'm not going to move you guys away from the scanner. The scanner is definitely like one of those nice tools to use, but when you really start to try to like perfect the craft of trading, you want to have some other stuff in your toolbox to get some nice trades and create more opportunities for yourself too. Sometimes when you're waiting on some of these trades to develop, you don't want to rush it. So like, let's see if like this, let's say this CAD JPY, for example, the best entry point is 88.02. So you kind of got to just wait and wait and wait. And if there's no trade setting up for you, you can definitely use some other type of tools or analysis to kind of find some other markets to kind of get in, especially if the markets are quiet or that particular pair is just not close to a pattern. You can kind of look for some other ways to get into it. All right. No other questions? You guys notice I always talk longer, kind of stall for last minute questions, just in case you guys have anything that pops up. All right, cool. Cool. All right, so let me know. Keep me updated on your scanners. Let me know. And so we can make sure that they're working and you guys can take some trades and start making some practice money before we do some real money. So I will see you guys a little later. Have an awesome weekend. And I will send out the recording later this evening so you guys can rewatch if needed. All right.